Hey everybody, I cannot believe it is September already, but here we are. We're about a week into September, and I'm just starting to do a little bit of buying in the stock market. It's been kind of slow for me for the past couple months buying wise. Just haven't really been too eager to buy anything. I've been mostly index funds and things like that. But in September, I'm starting to add a little bit more money to my account. I'm excited about a few different opportunities, and I want to go over them right now. Before we dive in, please take a minute and check out fool.com/Frankel, the link you see on your screen. Get a message from my sponsor, The Motley Fool. It's the top 10 stocks to buy right now. It's the best way to support this work I do on YouTube. Again, that is fool.com/Frankel. And please click subscribe to my channel if you don't already to keep up with all of my investing content. I try to do one of these stocks I'm buying now videos once a month. I cover a lot of different companies and personal finance topics like Social Security and more. So please join me on this journey. Hopefully, you will click subscribe. And I want to dive right in because there's 5 stocks that I am buying actively in September. Let me go ahead and share my screen real quick. So number one I've talked about many times before is PayPal. PayPal, actually, believe it or not, quietly rose to a new 52-week high, but it's still pretty low. It's down about 75% from where it was in 2021. It's traded in a pretty tight range over the past year, surprisingly, which is how it jumped to a 52-week high. There's a lot I like about PayPal right now. It's got a massive net cash position, which gives it the flexibility to kind of jump on whatever opportunities it sees, investments that it wants to make. And it also allows it to do pretty much whatever it wants with the free cash flow the business is generating. This is a highly, highly profitable business. It is generating over $5 billion of free cash flow per year. Management is essentially spending all of that on buybacks, which tells me that they think it's a very cheap stock. And speaking of management, there is a brand new management team. I love what new CEO Alex Chris is doing. He's a former Intuit executive, if you're not familiar. And unlike when a lot of companies, like we've seen, like, Starbucks just got rid of its CEO and brought in a new one, PayPal didn't just bring in a new CEO. They brought in an entirely new management team. Alex Chris, this new CEO, is the newest one on the management team, and he's been there for 1 year exactly this month. So, very new management team. They're already making some pretty big moves. They're about to start a big advertising campaign. I just saw that news this morning. I really like what they're doing. I think there's still a ton of potential in this business to add adjacent financial services and really kind of increase engagement with their massive user base. Over 400 million people actively use PayPal and Venmo. Again, the stock's down a lot from the 2021 level, trades for about 14 times earnings. It's one that I've been building a position over the past year or so, and I'm continuing to do so. Number two is one that is one of my biggest portfolio winners, but I think it's pulled back a little bit, and I think it's a great opportunity if you don't already own it, if you don't have a lot of exposure to home builders. So Dream Finders Homes, ticker symbol DFH. They're a home builder that is based in Jacksonville, Florida. They have a large presence in a bunch of key Southeast and Sunbelt markets. In addition to their home market, they're the official home builder of the Jacksonville Jaguars, by the way. They also have a big presence in Orlando. If you've ever driven to Disney World, you may have seen some of their billboards on the way. Both Carolinas and Georgia. They have a presence in DC. They have a presence in Colorado. And recently they made a big acquisition in Texas that brought them into that market. So they've grown pretty rapidly, both organically in their markets and through acquisitions. It's a very profitable business. They are very much in growth mode, but this is a profitable home builder, and their bread and butter is first time homes and first move up homes. First time homes are where a lot of pent up demand exists right now. Um, if you've been in the market at all, I don't need to tell you it's become a lot less affordable to buy a home over the past couple of years, mainly because of mortgage rates. Not just because home prices are high, but because mortgage interest rates have more than doubled over the past couple of years. So as rates start to fall, which they're widely expected to do this year, we could see a lot of people who want to buy homes but are currently renting come onto the market. That could be a particularly big catalyst for dream finders. Number three is General Motors. Ticker is GM on that one. Very strong results lately. Trades for a rock bottom valuation of about 5 times earnings. I do believe that they've executed on the EV rollout better than other legacy automakers like Ford and a lot of the foreign automakers. Not a flawless execution by any means, and there's still a lot of question marks when it comes to the direction of the EV strategy and how long it's going to take for widespread EV adoption and things like that. But a lot of potential there. Um, the cruise automation division is essentially, not even investors aren't even taking that into account when they're valuing this company, but maybe they should. Uber just partnered with Cruise to develop driverless ride sharing. They also partner with Waymo, and it's not just an exclusive partnership, but that creates an interesting kind of long-term dynamic there. And GM is buying back stock hand over fist right now. They bought back 18% of their outstanding shares over the past year. They're generating about $11 billion in net profit over the past 4 quarters alone. Projected to do roughly similar numbers over the next 12 months. That gives them a ton of financial flexibility. I mentioned they bought back about 18% of their stock. That didn't even consume all their free cash flow from the past year. So really interesting opportunity here. Number 4, the newest stock I've bought in my portfolio. This is the only one out of the 5 that is a new one to my portfolio. JD.com, they are a Chinese e-commerce company. They're new to my portfolio. I just opened a very small position. Now, revenue growth has been slow, which is one of the reasons the stock is depressed right now. Pretty difficult comps. They operate in China. China, the pandemic effect on retail was a little bit different than here. They had a zero COVID policy that essentially shifted everything to e-commerce, and for a longer time. So the revenues growth is slow, pretty much because of a very difficult comparison. A year ago, they were dealing with all the pent-up demand from COVID, pretty much like a year later than we did. But the management's focusing on efficiency, highly profitable business. Free cash flow is up 11% year over year, despite like 1% revenue growth. They are also buying, like GM, buying back stock aggressively. They bought back 7% of their outstanding shares in the first half of 2024 alone. Just renewed their buyback plan, added a $5 billion authorization, trading for less than 10 times forward earnings. Not without risk. Investing in any stocks in China is risky for Americans, which is why my position is a very small one right now, but it's one that could pay off very nicely if I'm right. And lastly, I mentioned I've been doing a lot of index fund buying lately, and September is not an exception. The one I'm really buying right now is the Vanguard Russell 2000 ETF, VTWO. Right now, and I've mentioned this before in other videos, small cap stocks are trading at a very big discount to large caps valuation wise. For example, the average price to book ratio of an S&P 500 stock is about 4.7 times its book value. The average Russell 2000 stock trades for about 2 times its book value. Not only are small caps historically the companies with very, much higher growth potential than their large cap counterparts, it's a pretty recent phenomenon that we have like the Magnificent Seven, the big tech companies, and those are the big growth drivers. Usually it's smaller businesses that have the more exciting growth stories throughout history, and I expect that to kind of reset. It may not be right away, but I expect it to reset. Lower interest rates could be an especially big catalyst for small cap stocks for a few reasons. Number one, small cap stocks generally tend to be more reliant on borrowed money than larger companies. Think of all the big tech companies that have very, very low debt. So lower borrowing costs are a natural benefit. As interest rates fall, right now there's a lot of money sitting on the sidelines and things like CDs and treasuries and things that are paying a 5% risk-free yield. As interest rates come down, a lot more of that money is going to flow into the stock market. And a natural place for it is really the smaller, really more opportunistic stocks. People who want to own NVIDIA and Apple right now do. But it kind of opens up investors for more, yield seeking and things like that. So I think the Vanguard Russell 2000 is a great way to play it without having to kind of research, 2,000 different small cap stocks individually and try to find winners. I think a rising tide is going to lift all ships here. So those are the 5 stocks that I am buying in September. I'd love to hear what you think about them. What are you buying right now? I'll do my best to answer every comment individually. Thanks for watching, and remember to click subscribe to my channel and join me on this journey. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.